Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the H1 FY26 post-earnings conference call of Jyoti Resins Adhesives Ltd. Today on the call from the management we have with us Mr. Utkarsh Patel, Managing Director, and Mr. Samit Shah, CMO. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the quarter and period ended September 2025, the growth plans and coming vision for the coming years, post which we will open the floor for Q&A. Over to the management team.
Good morning, everyone, and thank you for joining us. On behalf of the board and the management team, I would like to extend a warm welcome to all our investors, analysts, and stakeholders in Q2 FY26 post-earning call of Jyoti Resins Adhesives Ltd. Despite of heavy and long monsoon season in most of the states and overall soft demand and disturbances in dispatch and delivery chain, we have remained committed to our long-term strategy. This quarter has been one of the stronger performance quarters as compared to previous quarters. We are pleased to share the highlights of our results and discuss the strategy initiatives that are shaping our path forward. As you would have gone through the investor presentations uploaded to the exchanges, we have delivered 20% volume growth on a year-on-year basis, which we believe is strong delivery considering the extended monsoon this year. Gross revenue, excluding GST, also grew 20% YOY, driven by this volume growth. EBITDA margin, excluding other income, stood at 27.5% at par with our Q1 margins and in line with our broad margin guidance. We have continued advertising, marketing, and branding campaign with our brand ambassador, Mr. Pankaj Tripathi, with few TV channels and through digital mediums such as Instagram, Facebook to provide the necessary push to our pan-India growth plans. We have established our presence in 14 states and our aim is to widen our offerings in the existing and new states and increase our penetration in existing states. We continue to operate at 60-70% capacity utilization rates. We have started work on repairs and maintenance at plant to increase our brownfield capacity by 1,500 tons per month over a period of next 6 months, which will take our total capacity from 2,000 tons per month to 3,500 tons per month, thereby enhancing our ability to produce and sell more, get operating leverage on higher volumes as well as be competitive in the market. The total capex expected in this brownfield expansion will be around rupees 5 to 7 crores. Further to this, we are trying to scout land for our next greenfield expansion on the outskirts of the city. As and we move forward on this, we will keep you updated. Overall, we continue to be focused on reaching 500 crore turnover mark over the next 3 years, led by volume growth. We also continue to guide for a long-term EBITDA margin range of 25% plus or minus 2%. We are working hard on the ground level as well, using all available opportunities for branding, marketing, advertising, and trade marketing to scale up and maintain our strong positions. Now I'm opening the floor for the questions.
Thank you, sir. All those who wish to ask a question may use the option of raise hand and we'll invite you to ask a question. We'll take the first question from Kevin Vora. Kevin, you can go ahead, please.
Hello, am I audible?
Yes.
Yeah. So, sir, thank you for taking my question. So for my first question is, I wanted to understand your progress in newer geographies like Uttar Pradesh and Delhi. How has the traction been so far in terms of dealer onboarding and carpenter adoption? Since I think you're applying the same go-to-market strategy that worked well in Gujarat, what are the key challenges you are facing in the states and how do you see these markets scaling over the next 12 to 18 months?
So as uh, we are generating the revenue of almost 80-85% into the existing 5 states, and now we are moving to focus on to the other states. So UP and Delhi is our most prior states in which we want to penetrate more, and the response is actually good last year, and we have almost onboarded more than 650 dealers who are dealing with us, and almost more than 50% are we got the repeat orders from that. And we have the apply the same strategies that we always believe into the pool system and the tertiary sales. So we are more focusing on how we can we can set the mind of the carpenters who are using the white glue since years, and now they have the some brand that they can see about the qualities and the service front. So we are focusing on that part, that how can we get the engagement with the carpenters by doing the carpenter meets, in-shop meets, and gatherings of the carpenters. We are focusing on their community. So these are the all the strategies what we have used in the Gujarat. Right now we are focusing on that part.
Thank you, sir. And my second question is, we have started noticing Euro hoardings with Pankaj Tripathi in several parts of Gujarat, which is great to see. I wanted to check whether this campaign has also been extended to Delhi, UP, and so on, and if not, which states are still pending rollout. Secondly, given this ongoing brand push, do you think you will end up spending less or more on marketing and promotions than what had earlier been guided? And if possible, could you share the promotion spend
Sorry,
as a percentage of it?
your voice was not clear. Can you speak louder, please?
Sir, his
Okay.
question is, will you continue the kind of branding and hoarding that we are seeing in Gujarat in the other states? And how much will we continue to spend on this activity?
For the next year, this year and next year, percentage of the revenue, promotion spend.
So we have guided for the 7 to 8% revenue, what we want to invest into the brand communications and the trade marketing all put together. But our major focus will be into the trade marketing first, as this business model always depends upon the carpenters pool system. So we want to establish our brand and the first into the carpenter mind. So we'll more focus into the trade marketing for the dealers and carpenters. So it is about 7 to 8% we want to continue for the years for the brand communication and the trade marketing.
Okay. Thank you, sir. Thank you for taking my questions.
Thank you.
Thank you, Kevin. We'll take the next question from Smith Gala. Smith, you can go ahead, please.
Yeah, thank you. Thank you for the opportunity. So my first question was the revenue which we report is like after being adjusted for the rewards which we give to the competitors. Is there a possibility, or how does the accounting work to take it directly to the expenses so that the actual true revenue growth, like to like with volumes, can be seen to the investors?
Sure. So we are on it, and we are trying our best, and we are now sitting with the auditors regarding this how we can give more transparency. But I just want to add into this questions that it is not much difference. As an example, if we talk about the quarter 2, that is a difference of only 1 crore rupees, around 1 or 1.20 crore rupees.
Okay.
So it is percentage wise. If we can see that,
Hello. Hello. Am I audible?
yeah, you are audible. I'm audible.
Yes.
Yeah.
What was the difference that between 20% adjusted revenue growth and 14% revenue growth, which is actual?
No, so that is because of the you are saying the YOY. So that's why the reason the last quarter 2 was adjusted at that level. So it is a difference. Otherwise, if we I'm talking about the redemption,
Yeah. Okay.
not much difference.
Actually, last year the adjustment was significant, whereas this year it was like Utkarji just said, barely 1 crore, which is why when we adjust with last year like to like gross sales, excluding GST, the growth comes to 20%.
Okay. Understood. The next question was since even with the monsoon, this quarter, how much part of the quarter was affected by the monsoon, still we managed to report a 20% volume growth. And in the last con call, we had said that we are confident about demand, etc., picking up post Diwali. So, are we bound to see any increase further in the volume growth, maybe to reach 25 or 25% or 30% levels?
So we have guided for the 20%, and that is our the minimum guidance what we want to achieve. And as the monsoon were very disturbed all over the states, the extended monsoon quarter, though we able to deliver that. So we are very much optimistic for the quarter 3 and quarter 4 now, as demand is now started after Diwali. So yeah, we'll try our best that how can we cover up this in this quarter 3 and quarter 4. But 15-20% is the minimum guidance what we are giving right now.
For the full year.
Sorry,
For the full year, 20% will be achieved.
the full year, yeah.
Okay. So as you mentioned in your opening remarks as well, that we are guiding for 25% EBITDA margins over the long term. But after the correction we took after last year because of the ad spends, etc., we are still around 27-28%. And with the volumes increasing and operating leverage kicking in, should we be able to maintain this 27-28%, or further margin correction is on the cards?
No, this year we'll be able to maintain this 27-28%, but this is for the longer term guidance, as we are expecting maybe the raw material price increase or maybe the competition increase into the market, and we need to pass few discounts to the trades, or we need to invest more into the brand communications or trade marketing. So this is all over the very long term guidance what I'm giving. But this year we can say that 27-28% EBITDA we can expect.
Okay, I'll join back the queue. I have a few more questions. I'll join back the queue.
Sure.
Thank you, Smith. We'll take the next question from Dheeraj Kaswan. Dheeraj, you can go ahead, please. Dheeraj, you are not audible. We'll move on to Saket Sarogi. Saket, you can go ahead, please.
Hello, Karji. Sir, I had a question regarding the ad spends that we are doing. Could you help me understand like what was the spend last year and what this year we are spending? So amount wise and percentage wise, what's the difference between the 2 years regarding the onboarding of Pankaj Tripathi? So what has been the increase?
See, right now, if we talk about the previous years, so that was around 1.5 to 2% around of the revenue, and mostly we have invested into the trade marketing only. But this time, from the quarter 1, we have started to invest into the brand communications and the trade marketing both. So initial stage, the quarter 1 was very fruitful regarding that we done the 33 dealer meets and 7 carpenter mega meets. So we have invested into that, and now quarter 2 was the rainy and monsoon seasons and the festival season. So we were not able to invest, and that was not the wiser step if we go for that. So now quarter 3 and quarter 4 is open to do this type of activities. So it is almost around right now, if we talk about the H1, it is almost 4 to 4.5% of the revenue what we have spent. And now we will going to increase more into this quarter 3, quarter 4. So it will be average around 7 to 8% what we want to invest into the trade marketing and brand communications of the revenue.
So, sir, like this trade marketing and brand communication. So, like we are present in a lot of states. So, what kind of brand promotion we are planning? Like we're planning for all India wide or particular state wise. What is the plan?
So if we talk about the quarter 1 and quarter 2, so in quarter 1 we have associated with the news channels mostly, as our TG is the mail who has the age of the 25 to 60 years, so they are more with the news. So we invest into the news channels like Aaj Tak, India TV, Z Business, CNBC. And for the quarter two, we have continued with the Z Business and CNBC. And so these are the channels across all the states. So in a media front, we'll more focus into the TV, and also we are more focusing on to the social media digital marketing campaign, where the Facebook, the users, the carpenters are more into the Facebook and Insta. So we are focusing on to that. And about the trade marketing, then yes, the carpenter meeting, carpenter gathering, the mega meets, the dealer meets, these are the media where we are investing.
So like in the news media, sir, like we are doing ads only in particular states, or it's like every states where we are present?
No, right now it is India level. So it is Aaj Tak and India TV. So that is pan India level.
Okay. So like you told us in the first part, we have spent 4.5% roughly around this of the sales on this marketing and ad spends and all. And the second half, we are planning to take it to average of 7-8% yearly. So that means we are taking it upwards of 10% in the second half.
So that see that is depends upon, this is a longer term guidance that what we are planning to do for that. But that will monitor about the situations and the things. But we can consider that at least 7 to 8% should be there for the quarter three and quarter four both. So maybe that can the land about the maybe 5 to 6% average all over total revenue all over year wise. But yeah, we are expecting that at least 7 to 8% we are targeting for quarter three and quarter four.
Just one accounting question, like this ad spends and all, we give it in the other expenses head or in the sales promotion, these kinds of head, where it is
That
this expensed?
other expenses.
Other expenses. Okay. Okay. Thank you, sir.
Thank you.
Thank you, sir. We have a question in chat from Dheeraj Kaswan. Sir, his question is Pidilite had around 10% volume growth in H1 with almost no change in value terms. We have had 20% volume growth, but the revenue increase is lower. Are we having value degrowth due to higher discounts offered than last year for expansion?
No, see, we cannot compare at that level because they have the more than 800 products. So it's a different categories, different products. So that can give this type of results where the volume and revenue may be the difference is that. So in our case, we are into the wide glue product and single product. So it is like that.
Plus, we've also clarified for the adjustment that is there this year versus last year. So if you see on an adjusted basis, then the revenue comes to 20%.
And sir, another question is, can the management provide production volume for H1 and the past 3 years in metric tons to analyze the revenue realization for the company?
We can separately provide that. Right now on this con call, I don't have the exact data for that, so we can separately provide that.
Okay, so now the next question is from Pawan Kumar. Pawan, you can go ahead, please.
Sir, I just wanted to understand. I understand the brand promotion activities, but are we working on even making our product portfolio complete? Because that is one of the features customers seem to be looking into while purchasing the products overall.
See, all over we are focusing on the wide glue. So what the entire range required into the application of gluing the furniture by the carpenter. So we have the entire range. So we are now into the OEMs also, the modular furniture, the modular kitchen makers who requires the glue. That is also we have the three range into that. We have the range into the PVC for the PVC edge binding and PVC sheets also that stick to the MDF and plywood. And of course, this for the wood and plywood and MDF and veneer and laminate. So we have the entire range for the furniture gluing. So we want to stick to the this product portfolio right now, at least 4 5 years. So we are targeting ourselves that at least this is a 7,000 crore of market. So we want to reach first 1,000 crores into this particular segment. Then after we can think about adding few products into the portfolio. But right.
So, so what you are saying is, from your point of view, as of now, you believe that the product portfolio that is there with the with our sales force is enough to meet whatever is the requirement on the ground.
Yes, it is very enough. As I mentioned that this is 7,000 crores of market, and it's a huge opportunity lying into the existing market. So we want to cover that first, and we don't want to lose our focus by adding and as I mentioned that our core focus are into the carpenters. So what the carpenters are using and what they require for the application of the furniture gluing, that entire range we have with us. So we want to continue with this.
Okay. And can you just throw some light on, let's say, our older geographies, volume growth versus the newer geographies we might have entered in the past 2 years? Can you give us an idea on what have been the growth rates in terms of volumes there?
So I cannot give the detailed information and exact numbers for that on this call.
Mhm.
But I
Oh,
can give you the idea that, as I mentioned, that in a UP we are doing good, and we are getting the good response. So we are now presence into more than 650 counters and
mhm,
into major 7 cities of UP.
mhm,
Are the response we are getting. We are more now focusing onto the West Bengal part also, and we have developed few branches into the North India also. So right
mhm,
now, in Punjab, we are present in Patiala, in Chandigarh, in Haryana, in Lucknow, in Ludhiana, and in Amritsar also. So these
mhm,
are the major 6 7 cities in Punjab. So all put together, it's a balanced approach that we are penetrating into the existing mature states also, for the more volume generate into the from the existing, and more awareness kind of campaign, and more present to the shops kind of campaign into the Punjab and West Bengal and UP Delhi.
mhm. Okay. Okay, sir. Thanks.
Thank you.
Thank you. Sir, there is one more question in the chat from Kevin Gala. Are there any plans for expanding into other product segments?
That I already answered about that in a previous question.
Okay, so sir, we have a follow-up question from Smith Gala. Smith, you can go ahead.
Yeah. Thank you for the follow-up. So if I was there was some sound issue, so if I've missed if you have addressed this issue, sorry, I'll ask it again at the cost of repetition. Update on the brownfield expansion and the capacity utilization at the current levels.
So right now we are utilizing 60 70% of our capacity average cell wise, and now we have started the maintenance and few repair parts, as this plant is years old. So we have started to improve that parts, and within these 2 quarters we are targeting that we'll be ready with the capacity of the 3,500 tons per month. So that will right now we are at 2,000, and we are adding more 1,500 tons per month.
Okay. So this will be live in 2 months.
6 months,
6 months. Okay.
next 2 quarters.
Okay. Next will be, as the organization is growing, and this is slightly a longer term question. Are we seeing any senior level management being appointed in the future? And what kind of impact will it have on the EBITDA margins?
Sure. So Mr. Samit Shah is already on call. He has joined us as our Chief Operating Officer. So if you want to ask some questions, and he can give the guidelines also for the near plans. Samit, you want to add something?
Yes, hi.
Hi.
Sai Smith. So yes, Smith. So basically, as a part of our 2.0 journey for Jyoti Resins, as we are moving on from here for our larger targets, basically, so we are going for a overall how do we better the all the functions basically. So HR is one of the key functions wherein we are definitely going to go for some key talent hiring across the regions to strengthen our presence and to improve the way the working pattern also. And we are also adding into CRMs. We are also adding into various other app development and all. So we are investing in across various functions basically to strengthen our SOPs and governance, basically the way we conduct business, and to go in a more professional approach going forward. uh, so that's, yes, very much on card. Various level hiring is going to happen for sure.
And will it have any impact on the EBITDA margins going forward?
It will be momentary, yes. I mean, as we are building new territories simultaneously, protecting our market share in existing markets, and as we hire new talent, they'll take some time to get settled in the system and start performing and start delivering results. So momentarily, you can say a slight impact on that. However, it's having a great output. I mean, we can expect great output with these initiatives in the long run. So this entire efforts are, we are doing as seeding things are happening to have a better results in coming quarters.
Okay, and this process of the new hiring talent will take shape in 2 quarters, or it is already started, or in the next financial year?
It's already in the on the cards. It's already started. We have been meeting quite a few talents across India, and we have started already this process onboarding from Q2 itself. So we are very much on that. In next 1 or 2 quarters, we'll be having key positions filled, and that will also help us expand across the territories where we are not present also. So there are a lot of restructuring happening at internal level, is what I can tell you at this moment, briefly.
Okay. Okay. The next question is on the competitive landscape. So, are we seeing any new players entering into this space, or there were a couple of other players apart from Pidilite and us who are in this space? Are they still there, or they have exited the market, or new players entering? How is the competitive landscape for us?
So there is no new player. There were the players already existing, and as we all know that the most of the market share is with the brand, strong brand, and so we have the huge gap into that, so we want to cover that first. And there is no any new players has come for the white glue segment.
Okay, and final question from my side is, are we planning to get ourselves listed on NSE?
We are planning to do that, and we are on that. I think maybe within 1 or 2 quarter we'll get the approval for the NSC. So yes, we are on that.
Okay, thank you. That was all from my side.
Thank you.
Thank you, Smith. Sir, we have a follow-up question from Kevin Gala on chat. If we consider 20% top line this financial year, are we looking at 340 crore top line this year?
Yeah, so we are targeting for the 330 to 340 crores. And as I mentioned that we are very optimistic for the quarter 3 and quarter 4, as now market is very much open. So yes, we can say we are targeting for at least 330 crores.
Okay, sir, we'll take the next question from Madhur Rathi. Madhur, you can go ahead.
Sir, thank you for the opportunity. Sir, I wanted to understand that the sales promotion expenses that we are doing, that we did close to 18, 19 crores in FY21. So these were mostly to the dealers that we give them benefits and all, dealers and carpenters. Is that understanding correct?
Right.
And sir, so the brand spend and the advertising expenses, so the 7-8% will be additional over and above the dealer spends that we do currently. The 13% kind of margin that we give to dealers. Is it fair to assume that 20% would be a overall as a percentage of our revenue spent towards what we give to dealers and what we spend on advertising?
Right. That is over and above. So that is a different sales promotion discounts where the the offers, the schemes, and the loyalty programs, points, etc. covers that. And what I'm giving the guidance for 7 to 8%. That is advertising, trade marketing, trade campaigns, in shop made, dealer meets. So all put together, you can say yes, it's a 13 plus 7.
Sir, so overall 20% of our revenue, is it fair to assume that this number will be closer to 20% of our revenue or lower than that?
Can you repeat this?
Sir,
20% of
so the sales promotion currently we are doing closer to
12 to 13%. Yeah.
12 to 13% of our revenue, and we'll be doing 7 to 8% of our revenue on advertising. Sir, so on an overall basis, 20% is a fair assumption that we'll be spending towards all these expenses on the sales and marketing and building our channels and all.
Right. See, as for the 7%, we cannot commit that this year only 7%, but that is a longer term guidance that what we want to invest of the brand communications and trade marketing. But right now, because of this monsoon seasons and the reason of the festival, quarter 2 was very much low into that. So right now we invest 4.5% around for that averagely of the H1. So we'll try to cover up this into the quarter 3 and quarter 4, but that will be depends upon the situations and how the scenario is going. But we can say that 5% of the revenue for this year we can consider for that, at least 5 to 6%. So 5 to 6 plus 12 to 13, so 18% around we can say.
Got it. And sir, just a final question, sir. The OEM business, the modular furniture, PVC, MDF, whatever segments that we are targeting. Sir, what would be the margin profile of these segments? And sir, is this segment a customized product we need to provide of the white glue category depending on the customer's requirement, or is it a standardized product that we sell to most of our this B2B customers?
So it is a standardized product actually, and we have the three products into that. Economical grade to premium range. We have three products, and about the margin, it is almost the same as compared to the B2C model. But we for the this industrial B2B, we not required to invest more into the sales promotion offers, and so that's why the realization value of this product is a little low as compared to B2C. But the margin is we can guide about the 25% about.
And sir, how is the working capital for this segment? Is it on the higher end versus the our B2C segment, or is it on the similar
Almost same.
level? Similar. Okay, got it. So that was from me, sir. Thank you so much and all the best.
Thank you.
Thank you, Madhur. We'll take the next question from Tejas. Tejas, you can go ahead.
Good morning, Utkarsh bhai. Just two clarifications. First was the difference between 20% volume growth and 13% sort of revenue growth. So this difference in realization is basically some extra discounting that we've done, or is general fall in realization across the industry?
So you are saying quarter 1?
No, the current quarter we said our volume growth is 20%, but the reported revenue growth is about 14%. No?
No, that is the volume and the revenue is same, but that difference you are seeing, that is because of the adjustment of last quarter 2 and this quarter 2. Correct, Vinayji?
Sorry, sir.
The difference is because of the last quarter 2 adjustment and this quarter 2. So that
Yeah. The major is last year. This year it's hardly 1 crore odd. Last year it was approximately 4.5 crores.
Okay, understood. And the second bit was, Utkarsh bhai, you mentioned that this in the current quarter we had spent lower on ads, but despite that our margin is similar to the June quarter. So is there some sort of pressure on margin, some light on that? Because if
that
in
is
Q3 we start spending more, should we expect margins to further come down?
no. This is because see, we have invested for these repair and maintenance and to set up the new facilities, the brownfield facilities into our existing plant. So we require that, and because of this monsoon season, so we were not able to. The market was not responding. So we have this was the part of our strategy that will go with this repair and maintenance into this quarter, rather than
Okay.
into the carpenter front. Yeah. So this is
Sure.
that. Yeah.
Understood. Thank you, sir.
Thank you.
Sir, there is a question in a chat from Grish Raj. Are there any acquisition in the pipeline? Bottom line margin guidance for the current financial year?
Can you repeat the question, please?
Sir, his first question is, are there any acquisition in the pipeline?
No, there is no such exact acquisitions for this coming quarters, but we can look for if any opportunity we found where we get that level of setup that can give us the more growth into our journey. So we can look about that, but not specific for that.
And his other question is bottom line margin guidance for the current year.
So that is 27 to 28% of EBITDA margin, we can say.
Okay. There is another question from Vishal Pandya in chat. Are we considering exploring to expand into exports markets targeting potentially higher margins?
No, we want to stay domestic market only, because still huge gap and still huge opportunity lying into our domestic market. So we want to continue for this B2C model.
Sir, there is one question in chat. Can you give some fillers on how we are faring in the new states like UP and Delhi?
So these are the exact the replica of the our strategy. The see as in India, regionally there is always a few differences into the culture wise, mindset wise. So we are always believe that we should hire the local talent, and that can give us the good increase into the increase our market share. So these are the strategies, and how can we engage with them, and how can we engage their community with their culture and mindset level. So these are the strategies what we are implementing.
Okay, and sir, another question is how are we faring in states like Maharashtra, Karnataka, from where we are doing it's mature.
So we are doing good actually in Maharashtra and Karnataka, and also we are focusing more. We are very optimistic for these two states, as these both states are very bigger, and more as expansion is going on. So yes, Mumbai is we are doing very good into that, and we are trying hard to get the market shares into the Pune and the surrounds. But for the Karnataka, we are also targeting good growth.
Okay, there is one more question from Nikun Bhanushali on chat. Can you give some outlook for FY27?
So, as we are targeting ourselves as at least 20% of volume revenue growth, so that we want to achieve over 500 crore of top lines next 3 years. So 27, we are very will be very focused about, as all the functions and new CRMs, the new development into the apps, carpenter, trade marketings, the brand communications. So all overall efforts we want to put and try our best to achieve this our growth.
And his follow-up is, and by when we are aiming to achieve our goal of 500 crores top line?
3 years from here.
Okay, Nikunj, you want to ask? You can go ahead.
Yeah, so thank you for the opportunity. So since the new capacity would be coming in for next year, then probably and with the promotion and the marketing spend, we should be growing more than 20% for the next year, right?
Yeah, we are targeting for the 20% for the every year.
Okay, thank you.
There is one follow-up question from Grish Raj. Thanks. Can we term our company as Pan India present one? Which states are getting the best?
Can you repeat the question, please?
Can we term our company as Pan India present one? And which states are getting the best?
Yes, we are planning to add more states, and that are the Tamil Nadu, Kerala, Odisha, Bihar. We are targeting. So we are planning to add more 5 6 states within next year. And yes, we are planning that at least of these 3 years of journey, we can present each and every state of India.
Okay. Anybody wishes to ask a question, please raise your hand or you put your question in the chat box.
So since there are no further questions, can we have your closing comments to end the call?
Sure. So I would like to express my appreciation to our team across all functions for their hard work and commitment, and to our investors and analysts for trusting us and constructive feedback. Your continued confidence motivates us to aim higher and deliver consistent results. We will be remain focused and will try our best to execute best possible strategies and try our best to manage challenges and will keep growing. Thank you once again for joining us and have a great day ahead.
Thank you, sir. Thank you to the management team for your valuable time, and thank you to all the participants for joining on the call. This brings us to the end of today's conference call. You may disconnect now. Thank you.